Good morning. Here is today's Korean economic news briefing. We begin with a major policy announcement that could reshape Korea's economic landscape. The government has unveiled an ambitious startup initiative aimed at creating what officials are calling a startup boom. This comprehensive strategy represents a significant shift in economic policy, focusing on job creation through entrepreneurship and balanced regional development. The centerpiece of this initiative is the designation of 10 startup cities by 2030. 4 cities have been selected immediately: Daejeon, Daegu, Gwangju, and Ulsan, all home to major science and technology institutes. 6 additional cities will be added by next year. This approach directly addresses Korea's long-standing concentration of startups in the Seoul metropolitan area, a structural imbalance that has hindered regional economies for decades. The government is backing this initiative with substantial financial commitment. By 2030, authorities plan to establish 2 trillion won in specialized venture funds and create an additional 3.5 trillion won in venture investment funds. This year alone sees 450 billion won allocated to mother funds supporting these efforts. Additionally, the government is developing 17 local commercial districts to foster local entrepreneurship. These aren't merely financial commitments, they represent a fundamental reorientation of how Korea approaches job creation, shifting from job seeking to job creation. Complementing these regional efforts is an expanded version of the government's Everyone's Startup project, with a second phase launching in June. The initiative includes comprehensive support spanning investment, regulation reform, and second-chance opportunities for entrepreneurs. Winners of nationwide startup auditions will receive 1 billion won in support. Youth employment and regional revitalization are explicitly positioned as twin goals of this policy package. Moving to macroeconomic developments, Korea's first quarter economic performance has surprised markets significantly. The Bank of Korea announced that real GDP grew 1.7% quarter-on-quarter in the first quarter, the highest rate in 5.5 years. This figure substantially exceeded the Bank of Korea's own projection of 0.9% growth. The surprise reflected robust semiconductor-led export performance, combined with a rebound in construction and equipment investment that bolstered domestic demand. This economic outperformance has prompted multiple financial institutions to raise their 2026 growth forecasts. Several securities firms and international investment banks now project annual growth potentially reaching 2.4% or higher, with some analyst estimates approaching 3%. The semiconductor sector's strong performance is being credited as the primary driver, though economists caution that second quarter results may be affected by geopolitical tensions we'll discuss shortly. The GDP announcement triggered immediate reactions in government bond markets. Yields on Korean Treasury securities rose across the curve, with 3-year bonds reaching 3.496% annually. This represents a marked shift reflecting market reassessment of growth expectations and potential monetary policy implications. Turning to financial markets, Korean equities demonstrated mixed performance today. The Kospi index closed near the 6,470 level, showing modest weakness after 4 consecutive record highs. The index faced headwinds from foreign investors selling exceeding 2 trillion won. However, the KOSDAQ index delivered more impressive results, surpassing the 1,200 level for the first time in approximately 25 years, driven by semiconductor-related stocks and biotech companies. Individual and institutional investors provided support to the broader market despite foreign selling pressure. The $1 exchange rate continued its upward trajectory, marking the 4th consecutive day of gains. This reflects escalating geopolitical tensions in the Middle East, particularly around the Hormuz Strait and US-Iran tensions. Such currency movements carry implications for Korean exporters and import-dependent industries. In industrial news, the impact of the Yellow Envelope Law is becoming increasingly visible. 1 month after the law's implementation on March 10, labor disputes have spread nationwide from large corporations to smaller subcontractors. As of April 22, 1,077 individual labor unions have targeted 393 small and medium enterprises serving as primary contractors. This cascading effect demonstrates how labor disputes originating in major corporations are transmitting downstream to vulnerable smaller businesses. Despite these labor challenges, certain industrial sectors are performing exceptionally. Power equipment, semiconductor, and shipbuilding stocks have captured investor attention. HD Hyundai Heavy Industries has set record highs with a 4.68% gain, reflecting strong global demand for ships amid favorable replacement cycles. Energy transition investments are also supporting these sectors as global energy demand increases. In real estate markets, we're observing significant distortions in apartment subscription patterns. In Gangnam District's 44 square meter units, maximum subscription scores have reached 79 points, achieved only by families with 5 or more dependents maintaining 15+ years of both homeownership gap and subscription account history. This creates the unusual situation of 6 family members living in small 2-bedroom apartments. Meanwhile, non-Gangnam large units show considerably lower competition despite theoretically stronger positions. This highlights tensions in current housing policy frameworks and raises questions about the equity of point-based allocation systems. International economic developments continue reshaping Korea's external environment. The Philippines has raised its benchmark interest rate despite economic slowdown, battling stagflationary pressures from Middle East tensions and global trade disruptions. The United States has deployed 3 aircraft carriers to the Middle East, the first time since the Iraq War. This geopolitical escalation is introducing volatility into energy markets and exchange rates. On artificial intelligence developments, OpenAI has released GPT 5.5, described as the company's most capable and intuitive model yet. Performance benchmarks indicate substantial advantages over competitors' offerings. This reflects intensifying competition in generative AI markets as OpenAI pursues an IPO within the coming year. However, AI's economic impact extends beyond technological competition. The employment implications are becoming concerning. Research from the Bank of Korea indicates that sectors most exposed to AI have experienced sharp declines in youth employment. The situation worsened recently when Meta announced layoffs affecting approximately 8,000 employees, roughly 10% of its workforce, to offset massive AI investment costs. This pattern suggests potential broader labor market disruption ahead. For investors, today's briefing suggests a mixed outlook. The strong GDP surprise and semiconductor momentum provide positive near-term momentum. However, geopolitical tensions, foreign investor selling, and labor market uncertainties warrant caution. The government's startup initiative offers longer-term growth potential but requires time to demonstrate effectiveness. For general viewers, the startup policy expansion offers entrepreneurial opportunities outside Seoul, particularly for younger Koreans. However, AI-driven employment disruption demands attention to skill development and workforce adaptation. Real estate markets appear increasingly complex, with significant divergence between property types and locations. This has been today's Korean Economic News Briefing.